Great, thank you. And hopefully you can all see my screen. Today I'm going to actually be talking about Fibonacci, the magic of Fibonacci. It's a core tool for your trading career. I think one of the main things when it comes to trading is being able to identify significant areas of support and resistance. They help both entries with exits, you name it. It's one of the core aspects of technical analysis. And the Fibonacci tools are actually magical in the way they can help you do that. So that's what I'm going to focus on today here. Now, a bit about us here at Trading Wins before we get into the presentation. I'm Vince Vora. I'm the head trader here, and I have been trading for a little over 30 years now. It's unbelievable how quickly it's gone by. It's been a great ride, and we are real traders here, and we're passionate about teaching, and we've been developing our own strategies and trading systems over the years, and teaching people from complete beginners to experts around the globe. For those of you who haven't had a chance to meet me, that's me here. We were in Las Vegas for our last live trading event. The gentleman you see here is Raul. He's our coaching coordinator. As long as we have time, I'm going to bring him on near the end of the presentation to give me a hand with the Q&A. But in today's presentation, what I'm going to go over is a couple of different Fibonacci tools, but it wouldn't be fair to just give you those tools and let you walk away without a strategy. So what we thought we'd do is, first I'm going to start off with the money management rules that we follow for all of our strategies. And this is really a core part of our trading here at Trading Wins, and I'm going to do so briefly though. I'm going to go through it very quickly, and then I'm going to give you a couple of different strategies that we use, our favorite trade strategy and our winning momentum strategy. I'll quickly outline the rules and the different steps involved in the two strategies, and then I'm going to show you how to use the Fibonacci retracement tool and the Fibonacci extension tool to really enhance these strategies. Now, the Fibonacci tools don't just apply to our strategy, they'll apply to any strategy. So regardless of what technique you're using to trade with, these will help you, okay? And then we'll touch on a few other tools that are key as well, and hopefully we'll have plenty of time for Q&A. Before I get started, just a quick poll question for you. Please, can you let me know who here has seen me present on a webinar or at a presentation such as this before? Just type a Y or an N into your chat box. I'd really appreciate it. Great, I see some familiar names. Great to have you back. Thanks for joining us, everyone. Okay, great. Let's get started then. Please do remember that trading can be very risky, so please do not trade with real money until you're completely comfortable with the system that you are using. Now, our money management rules, as I mentioned very quickly, do not trade with money you can't afford to lose. I'm sure you've heard a million times what this is really all about, is trading with an amount that's small enough that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry. And once you're in that trade, you really do need to remain calm and think clearly to be able to manage it appropriately. So if you're worried about the amount of money you have in there, you won't be able to do that. Now, one of the rules we use for this is never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5%, even 2%. And that way you'll have a sizable trade on, but you'll be reducing your risk considerably. Also, we never have more than half of our account balance active in the market at any one time. The reason being, there's so many factors when it comes to the markets that are completely out of our control, and any major news announcement can really drive the markets against us. So number one, we use this to reduce any loss, and secondly, should that loss happen, we'll then have half of our account still available that we can put back into the markets and make back those losses. Now more than ever, it is extremely important to be selective with your trades and only pick the one or two highest probability trade setups per time frame to trade with. You know, we've seen many times, and even more recently, where the market can be up 200-300 points one day, but completely retrace the next. So when it is trending strongly in one direction, if you put a number of trades on the same day and the very next day the market pulls back, it's going to put you in a huge hole right off the bat, which is what you want to avoid. So be selective, be picky, and only choose that one or two highest probability setup per time frame. A couple of other rules we follow: you will never go broke taking profits. You'll see through the strategies we use how we limit our risk. So when you have a profit, get used to taking it, especially if you're just starting out. You know, as you gain experience, you will learn how to remain in a trade a little longer each time. Until you master that, get used to banking those profits. And please do remember that it's not about whether you are right or wrong that's important. But when it comes to trading, it's all about how much money you make when you're right versus how much money you lose when you're wrong. So let's talk about our two strategies here. Let me bring up my charts here and go over this with you. Now, first off, our favorite trade setup, a very simple strategy based solely on technical analysis, and it has one simple indicator here, this blue line, which is the 20-period simple moving average on here. So, and we use this mainly for momentum, but the keys when trading any of our strategies is to be able to quickly identify trend and momentum. Now, when you're looking at a chart like this, it's pretty simple to spot the trend. I mean, it's clearly trending lower, no question about it. But how do you really interpret momentum? And that's where the 20-period moving average comes in. So you can interpret momentum a couple of different ways. One is by the slope of the price candles here. So obviously, the more steep that slope is, the more momentum you have on your side. And the 20-period moving average basically draws that out for you. But here's the key. If you're measuring it using the price action, you get a nice spike lower, then at some point you're going to get a retracement. Now, if you're just reading momentum off the price movement, you can easily mistake this as an upward momentum. Okay, but look at the moving average throughout this period. Okay, still clearly pointing lower. So what this does is not only help you identify the amount of momentum to the downside, but it helps you understand that this retracement here is merely just a short-term pullback before a continuation of the trend. And now your job as a trader, once you see that pattern, is to just identify your entry point to take advantage of that next leg lower, okay, or that next swing lower. So let me draw this out for you so you can understand it clearly. When we're talking about a long trade, what we're going to be looking for is a significant momentum higher. So you can have slight momentum, you can have slightly more, but the more significant that slope in that 20-period moving average, the better. So you're going to be looking for a nice slope higher, and then you're going to be looking for some type of pullback or retracement here. Okay, it can be a sideways consolidation, or it can be a nice strong pullback. Okay, and then once you see that, what you're looking for is a reversal signal that tells you that this retracement is over and that the trend is going to continue. And the reversal signal we'd be looking for is a bullish engulfing pattern, and it's going to look like this. Okay. Now, there's a difference between the setup and the actual trigger to get you in the trade. Okay, but for the purposes of the setup, we're only going to be looking at the bodies of the candles, not the wicks or the tails, just the bodies. And what you want to see is that the body on the right here completely engulfs the body of the candle on the left. Okay, they can actually be at the same levels, but the one on the left cannot exceed the high and low of that body, which would be the open and the close of that bar. Okay. Now this would be a valid setup, and I am going to just change the color on this, because what you want to do for a bullish trade is look for a green engulfing candle. The closer it closes to its highs, the stronger it is, okay? Once you see the setup, now your job is just to keep an eye out for a trade 1 tick or 1 penny above the high, the absolute high, including the wicks there. 1 tick above there for your entry. And if you get that, you go long and you put your stop just below the low, the absolute low of that same bar. So your risk will always be contained to the range of that 1 bar, okay? And this will signal that reversal and will kick off the continuation of that move higher. So that, in a nutshell, is the setup for a long trade. Short trade is the exact opposite. You are going to have, you are looking for a slope lower, and again, the more significant that slope, the better, some type of retracement or consolidation, and then you want to look for a bearish engulfing setup, which is going to look almost identical to your bullish. The only difference is your bearish engulfing candle should be red, okay? Because again, you want it to close as close to its low of that day as possible. The previous candles here can be any color. It can be green on green, it can be red on green, and same here, it can be red on red or green on red. It really doesn't matter. But once you have that formation, you're then looking for a trade 1 tick or 1 penny below the absolute low, including the wicks, and your stop would go just above the high of that same bar. So the key thing here is that at the time of this setup, that moving average is still sloping higher, okay? Because if this pullback went too far, the moving average would flatten out and start rolling over. If that happens, you've lost momentum and you do not want to take that trade, okay? So let's go through a couple of examples here. Right here, we had a nice slope lower. Beautiful, beautiful stretch here with trend and momentum on our side, right? And here was the most recent flush, and now we got a nice pullback. When we see that pullback, and it's a nice orderly one, which is great, we're looking for that reversal signal in the form of a bearish engulfing setup, which happens right here. Okay, I'll zoom in. See that the body of the candle on the right completely engulfs the body of the candle on the left. We are then looking for a trade just below the low, the absolute low, including any wicks of that bar, and our stop would go just above the high here, okay? Now, if the entry of your trigger is on a gap, then you need to reassess the risk level because your stop would go at the same place. So you've got to determine whether, you know, you're still comfortable with your entry down here versus just below the low. So if it's a minimal gap, it's fine. If it's usually larger than that, I disregard the trade and move on, okay? Now, and here's where here's a couple of key rules, and then how we incorporate the Fibonacci tools. Once you have that setup, what you got to make sure of is that the trade triggers before it trades above the high. So if the next bar traded above the high before it ever traded below the low, the trade would be disqualified, okay? And also, if 2 more bars close and it still hasn't triggered, we also disqualify the trade. Why? Because obviously the momentum isn't as strong as we had anticipated. And following those 2 rules, you will avoid most trades that would otherwise be stopped out, okay? But now, how do we make this even better? Or how do we make sure this is a high probability setup versus just an average setup? Well, here's our entry or our setup, okay? There's our bearish engulfing setup. If we incorporate the Fibonacci retracement tool here and go from the most recent high to low here, okay? The key zone you want to look for is this zone between the 38.2% and the 61.8% zone, anywhere in here. This is a significant area of resistance for this pullback. And so if you get that pullback and you get a reversal signal anywhere in that zone, it has a very high likelihood that it will reverse and you will see a continuation of that move. And that's the real key here. And now if you look at the range of that bar, look at the risk we had on this trade compared to that potential return. And no one's saying you're going to get the absolute bottom, but even if you get a fraction of it, it's still obviously way more than the risk you had on, which in the long run is going to make all the difference for you. Not only will you have more winners than losers, but your winners will be much greater than your losers. So the retracement tool, the Fibonacci retracement tool, helps you draw in significant levels of support and resistance and finds that support just behind your reversal signal before it rolls over and you get a continuation of that move. So you can use the Fibonacci retracement tool to confirm your entry. What can you use to set your targets? Well, and I'm going to zoom out a little here. Okay. You take your Fibonacci extension tool, you take the same high and low, and you always want the previous high and low. There you go. Draw them in. And now for your targets, this is what you'll be looking for. Here was your entry. Okay. This was the bullish engulfing setup. Your first target will be this 100% level, the previous low right here. Okay. If you're trading multiple option contracts or multiple shares, you can scale out of a third of your position here. You move your stop from above the top of this candle, okay, to below break even. So if this was your entry, you want to put your stop, say somewhere around here, and take a third off the table. So now you've taken off your risk and you've banked some profits. And now your second target will be that 127.2 extension here. Once you hit that, you take another third off and you move your stop to just below that 100% level, and then your next target should be that 1618. Okay. And if you look to the far right, the Fibonacci's have the actual dollar amounts you can use to set those targets or place your orders at. And I like to go to whole numbers personally, but that's a personal thing. So quickly we can look at another example here before we move on to the second strategy. So once again here, what are we looking for? Trend and momentum. Now obviously you're going to be looking to the far right of your chart when you first bring one up, and you can see here that on Caterpillar we've certainly got trend lower, we've certainly got momentum on our side, we've got a nice pullback now, and so we're waiting for that reversal signal. Now has it pulled back to a proper Fibonacci level? Let's go from low to high. Yes, it has. It's already in that zone here of 38.2%. So it can even pull back a little further. But now if it gives us some sort of reversal signal here, then we would have a valid trade candidate to the downside. The other key thing here is looking for support and resistance. So have a look at this trade up here. Okay, we get a nice move lower. So we've got that momentum lower, we get a nice retracement, and here is our bearish engulfing setup. Okay, now let's take our Fibonacci retracement tool from low to high. Did it come back within that zone of 38.2 to 61.8? Yes. If we draw a line here from this area across, is it at an area of support or resistance? Is there more support there? Yes, there is, right along here. So when you have that, there's a high likelihood that this reversal signal will hold true and you will get a continuation of that move to the downside, which we certainly got on that one. Okay, so those are just two Fibonacci tools that you can use. There are several others that I will talk about a little later, but let's move on and have a look at our second strategy, which is our winning momentum strategy. And for this one, we have a couple of additional indicators on our chart. We still have that 20-period simple moving average in blue here, but we also have a very stripped down version of our Ichimoku cloud indicator. Now, generally this cloud indicator has many other lines on it. They're moving averages with a special formula, and it's usually used as a strategy in itself, but we like to use this only for trend. So we strip out all those lines and we simply use the cloud portion for trend. So we're continuing to use that 20-period moving average for momentum, and the cloud portion, the way we use this for trend is if the candlesticks and the moving average are both clearly below the cloud, we consider that a downtrend. If they're both clearly above the cloud, we consider that an uptrend. And if one or both of those are overlapping the cloud, then we consider that a sideways consolidating market with no momentum, and we are not interested in trading during that time period. Okay? Now, the settings for the Ichimoku cloud that we use are the defaults, 9 and 26. We do not touch those. Okay? Now, the last one we have down here is the RSI, or the Relative Strength Index indicator. And this is a very popular indicator that's normally used to identify significant areas of overbought or oversold conditions. There are usually lines drawn here at the 70 or 80 level, and another one here at the 20 or 30 level. And the way this is used traditionally is if this red line were to dip below that 20 level, this market would be considered significantly oversold, which means you could expect a bounce at any time. If this red line were to move above that 80 level, it would be considered overbought, and you would expect some type of pullback or rollover at that time. Okay, we use it slightly differently. We remove those lines and we draw one in right down the middle at the 50 level. Okay, now also the setting, as you can see here, is a 7-period RSI. The default on most platforms is 14. We want a much more responsive RSI, so we cut that in half, and we have a 7-period RSI with a line drawn at the 50 level. And this now is how we're going to use this, these indicators, this combination of indicators together. We're still going to be looking for trend and momentum when we first bring up a chart. Okay, so for example, let's have a look at SEE. If we bring up this chart and we look to the far right, do we have trend, or is there a trend? Well, the moving average and the candlesticks are both below that cloud, so we are clearly in a downtrend. Do we have momentum? Well, is the 20-period moving average sloping lower? Yes, it is. So we definitely have trend and momentum to the downside. So now it would just be a matter of waiting for some type of pullback or consolidation before a continuation of that move lower. Okay, now once we start getting a pullback here, what we would do is turn our attention to the RSI down here and wait for the RSI to cross from above back below that 50 line to signal our setup. Okay, and it's reversed for a long trade. If we look back in this area here, okay, when you have candlesticks and the moving average above the cloud, we're clearly in an uptrend. We have a significant slope higher on that moving average, so now we have momentum on our side. Once we have that, we turn our attention to the RSI here, and we wait for that pullback and that move below the 50 line here, and then back above. And when we cross back above here, that would be our setup bar. So for example, right in here would be our setup bar. Now, it just so happens that this is actually also a bullish engulfing setup. Okay? Many times you'll see that the two strategies trigger at the same time, which usually results in a pretty powerful setup. But just like the other strategy, once you identify a setup, you're waiting for a trade above the high, the absolute high of that bar, okay, to get you in the trade. The difference is the stop for this strategy would go just below the most recent low, not the same bar. Okay, you want to give yourself a bit more of a buffer, because sometimes it does what we call a double dip. Okay, it'll move down below that RSI, back above, and then back below and back above. Okay, so and then you just manage the trade from there. So how do we make this strategy even better, or confirm that entry with the Fibonacci tools? Well, let's have a look. Let's have a look at this trade right here, this setup. So we clearly had trend and momentum lower. We start getting this pullback right in here, okay? And we turn our attention to the RSI, and now the RSI at this stage moved from above to back below that RSI right in this area here, triggering our setup, right? So how do we confirm that this is a strong trade using the Fibonacci tools? Well, remember that Fibonacci retracement tool? Again, you want to look back and find your most recent high and low, drag them over, and there it is. You can see that the pullback came right to that 38.2 level. Do we have additional support or resistance in that area? Yes, we do, if you look right back here. Okay, so there's a very high likelihood that this is going to bounce off that level and turn lower. And in fact, that's exactly what it did, setting up the trade, and boom, it moved to the downside. Remember, where's our stop here? Our stop was above the most recent high, right up here. Okay, right up there. And there's your trade setup. Let's look at a couple of others here. And you can use this, actually you can use either strategy on equities, on futures contracts, on Forex pairs. It really doesn't matter. Any time frame, it really doesn't matter. Okay, so I want you to look at this trade here, right in here. Now, this is both a bearish engulfing setup using our other strategy, but if you look at my crosshairs, you'll see that this is also a time when we got a cross below that 50 line on the RSI while we were below the cloud with both the candles and the moving average, and we had a slope in our direction. Okay, so everything was there. Now, how do we confirm this? Let's take our Fibonacci retracement tool from most recent high to low. Okay, zoom in. Did we pull back into that zone of 38.2, 61.8? Yes. Is there more support and resistance in this area? Yes, there is, right back in here. Okay, high likelihood this is going to bounce off and roll over. Okay, which in fact it did. How do we set our targets? We go to the Fibonacci extension tool, same most recent high to low and back. There's our targets. Our first one is that 100% level. Remember, the trade entries in this area. This is that setup. Okay? Here's your first target. Here's your second. Here's your third. But if I span out here, look how well these levels work. So once you draw those fibs in, you can leave them on your chart. Remember, back in here when this set up, none of these candles had printed yet. None of these had developed. It was just here. Yet we drew our fibs from previous candles. Okay, so these lines were already drawn in. Look at how well they identify those areas of support and resistance. Whenever you get price action approaching an area of support or resistance, it's going to either bounce off or it's going to hang around there for a little while and break through, and if it does, it'll tend to move to the next level. So it's also great to be able to spot how much room there is from your entry to that next level of resistance. Okay, but you can see that it comes down here, it bounces off, goes here, breaks through. Where does it go? The next level, right? Moves up, comes back, hangs around for a little while, dips, comes back to retest it, bounces off, comes below, and you'll see how well it holds throughout. It really is amazing how well they work. And but again, they work on anything. Here's another ETF, the market sector gold miners ETF. And if we look in this area here, do we have trend and momentum on our side? We are below the cloud with both candles and the moving average, so we clearly have trend. Do we have momentum? Yes, we have a nice slope lower here, right? So we clearly have trend. What do we focus on once we start getting a pullback? The RSI. It comes above and then turns back below. So this here is your setup area right in here, right? And can we confirm the trade using our Fibonacci's? Take our retracement tool, look left, take the most recent high to low. Let me zoom in so you can all see it. Did we pull back into that area of 38.2 to 618? Yes, right in the middle, right around that 50 level. If we look for additional support or resistance, do we have it? Yes, right over here. High likelihood this is going to bounce there and roll over. There's our reversal signal, and boom, off it went. Again, you know, from your entry here to your most recent high here where your stop would be, look at the level of risk, that range compared to that reward. Just a beautiful textbook setup. Let's look at one or two more if we have the time, and then we'll move on here. TLT, another ETF, and it doesn't have to be an ETF. It can be a stock, any time frame. It really doesn't matter. But here was another one. Right now, we've got this beautiful trend lower with momentum. We get a nice pullback. Focus our attention on the RSI. Here's that cross from above to below in this area here. We have a nice setup. Can we confirm it with the Fibonacci retracement? You go to the most recent high to low. Boom, it came right back to that 38.2. Is there support, additional support in that area? Yes, there is, right over here. Okay, and off it goes. Okay, is every trade going to work out? No, not every trade will, but if you follow the rules and stick to the setups that match the full criteria, as I mentioned, you will find you're going to have more winners than losers, and your winners are going to be much bigger than your losers, which overall, in the long term, is the formula you need to be successful. Okay, let's look quickly at one more here, and then we'll move on with the presentation. So here's Caterpillar, and Caterpillar here, focus in this area again, and right now actually it's about to set up once again. Do we have a downtrend? Yes. Do we have momentum lower? Yes. Are we experiencing a pullback here? Yes. After earnings, it gapped higher here, moved higher, and so it's in the midst of that pullback. All we're waiting for is the RSI to move above and then back below that 50 line. When that happens, that's our setup. Okay, that's our setup. Will it be at a proper fib level? Once you get there, draw it and see. Look at this example here. If we take our retracement tool from high to low, boom, it came right back into that zone, right in the 50 level. We had the cross here, and off it went. Was there support, additional support in that area? Right in here? Yes, there was. Right back in here. Okay, so it's pretty straightforward. And just remember those rules once you have that set up. If it trades above the high first before it ever triggers the trade to the downside, you want to disqualify it. Okay? And for a long trade, if it trades below the low, before it ever trades above the high and triggers the trade, you want to disqualify it. Otherwise, pretty straightforward there. Okay? So now, let me just get back to my presentation here. And I want to tell you that so far, what I've shown you are just two great strategies that you can use. As I mentioned, these work on any strategy. They're there as support tools, and they're there to confirm your entries and help you set your targets. All right. But I really want to tell you about a pro training course that we have that builds on these Fibonacci tools and helps you enhance any strategy you're trading with. And this is just a fraction of what you're going to learn. During this course, I teach you not only the basics of the Fibonacci's, but tricks and specific Fibonacci levels that only the pros know. Some people might get upset that I'm showing you these, but I reveal those in the course. I also show you a different way of combining the RSI with different Fibonacci tools to look for additional setups and a very unique way, in addition to what I showed you today, of identifying extremely strong areas of support and resistance. During this class, I'm not only going to recap the retracements and extensions, but also teach you the Fibonacci arcs, the fans, which have become more and more of my favorite, the spirals, and the Fibonacci time series. All great tools, all there to help you pinpoint your entries and identify your targets. The link for this class is tradingwinds.com/fibs, F-I-B-S. But before you buy, let me tell you exactly what you're going to get. You will get access, lifetime access, to the on-demand recording of that crash course, which is $149 value. And then in addition to that, we're going to throw in a 30-day membership to our pro service. I'll come back in a second and tell you more about that, because it really is a core piece of this package. But together, this is a value of $246, but as always, investor inspiration is great to us, and we always want to offer a very special deal for them. So we're offering this complete package for just $27. There's 30 of them available. First 30 people, tradingwinds.com/fibs. Now let me go back and tell you a bit more about the membership, because I think this is really key. The pro membership service is really the best way to enhance your trading and take it to the next level. What you're going to get with this is daily updates from us to get you ready for trading the very next day. And in these videos, you're also going to get unique trade analysis and trade setups for the next day. You'll be able to follow along step by step and see exactly why and how we're trading using 3 of our powerful systems. In addition to the 2 strategies I showed you today, we have another one that we use and we highlight trades for as well. These systems have been giving us winners for over 14 years in a row now, and they're all handpicked personally by me. So you can feel confident that you have a trader with 30 years of experience picking these for you every night. You're also going to get to attend our weekly live chats with me, and this is really my favorite part of the pro service, where I get to interact directly with you and answer all of your trading questions. It really is the best way to get your questions answered. I love these sessions. We did one this morning, and I'm pretty sure you'll love them as well. And if you can't attend live, no worries. They're all recorded and made available in your own personal video library. Now, as a pro member, you're also going to get discounts on our other educational courses and special gifts from us. It's our way of saying thanks to our loyal members. I love trading, and I really enjoy teaching people how to do this for a living. I've literally trained thousands of traders just like you, and believe me, it makes a big difference to have an experienced trader hold your hand and mentor you through the ups and downs of the markets, especially the type of markets we're seeing right now. This is crucial. So you're going to get to experience all of this for just $27 for 30 days. And trust me, this is not a big money maker for us at all. I can honestly tell you that I wouldn't be taking time out of my trading day if this was just about the money. I really believe in our service, and I would love for you to try it. Just go to tradingwinds.com/fibs, F-I-B-S, to get the special. Now, I'm so confident you're going to love it, and you're going to get at least 10 times the value of what you're paying for, that if you're not happy, just call my office and you can cancel at any time. And if you are happy, and I'm confident you will be, at the end of the 30-day period, you don't need to do anything. The membership will renew at our special rate of $97 per month. And if you don't feel like you're getting at least 10 times the value, like I said, again, you can call my office at any time. We call it the world's easiest cancellation policy. Our goal here is to help you make money, not cost you money. Okay, now I see there's a lot of questions, so I'm going to ask our coaching coordinator, Raul, to come back on here and help me read off some of these questions so we can get through them in the few minutes that we have left. Raul? It is limited time.
Sorry, I just muted the mic there by accident. It was in always fast-paced sessions. Question from Jim. I'm a futures trader. Does this apply to the futures markets as well?
Oh, absolutely. Any market, any time frame, any exchange. These strategies are based solely on technical analysis, and these fib tools are there to support any strategy. I can tell you I've traded these strategies in the US, in Canada, in the UK, Australia, in Hong Kong, they work equally as well.
I forgot to mention, if you do want to place your order by phone, you can do that. 1-888-574-2426. You can probably hear the phones ringing in the background. It's a question that always comes up. I asked you this very first time we did this class many, many years ago. I was saying to you, why do the fibs work?
You know, I don't know. You know, there are those magical, it's a mathematical formula from Mr. Fibonacci there, but I don't know why, and I don't really care. I can tell you, though, having used them for many, many years, that they do work. And when it comes to trading, they help you identify areas of support and resistance that are crucial. And as I mentioned, they support any strategy.
You know, a lot of people want to protect their positions that they have during earnings season.
Yeah.
How do the fibs allow them to do that?
You know, they help you do that because not only are they helping you confirm that entry, but also identifying those next levels of resistance that the stock or that futures contract can run into. And so you can plan for that and make sure that you're adjusting your order or taking your profits before it runs into those resistance walls.
Jim was asking, I need a promo code. Is there a promo code? No, Jim, you just go right to the page, go ahead and order it. It's $27. There's no nothing else to be concerned about there. Our friend Joan is on today. Joan says trading wins is excellent. Well worth the $27. Joan, always nice to have you on for a nice endorsement.
And again, you know, we're not really doing this for the $27. We're very proud of what we do here, and we really want to give you a chance to see what we do here. So that's why we're including that 30-day membership.
How often do the videos, the market updates, and the trade alert videos come out?
Every Sunday to Thursday, so 5 times a week. We send those out, and again, twice weekly, we have those live market chats. They happen every Monday evening at 8 p.m. Eastern and Thursday mornings at 10 a.m. Eastern. All those sessions are recorded, so throughout your 30-day membership, you'll receive at least 8 recordings in addition to the on-demand recording of the Fibonacci crash course.
Fran says, what trading platform can I use these strategies on?
You can use them on any platform that have these indicators, and nowadays just about every platform has these. The 20-period simple moving average, the Ichimoku cloud, and the RSI.
Another popular question, what's your favorite time period to trade?
You know, more and more I do trade mostly on the daily. When it comes to intraday time frames, I prefer the 15-minute and the hourly, although as I always mention, we have many members who trade the S&P minis on a 5-minute using these, and these work exceptionally well on the weekly and the monthly as well.
Speaking of time frames, I'm being told we've got about a minute left. I'll let you recap the offer one last time.
Sure. So once again, what you're going to get is an on-demand recording of our Fibonacci crash course, which not only includes what I've taught you today, but I also am going to reveal tricks and a specific Fibonacci level that pretty much only the pros know, a different way to combine the RSI with your Fibonacci tools, and show you an additional way, a pretty unique way of drawing in very significant levels of support and resistance on your charts. In addition to those retracement and extension Fibonacci tools, I'm going to teach you the Fibonacci arcs, fans, spirals, and time series. You can get it at tradingwins.com/fibs, and with that you get that 30-day membership as well. Okay? Thank you again, everyone, for attending. I hope you got a lot of value out of this, and as always, a big thank you to everyone at Investor Inspiration for having me back. So with that, I'll turn it back to our host.